Hey everyone, this is a trader investor. In today's video, I want to talk about the Strat a little bit more, and specifically I'm going to talk about the pivot machine gun. And what is the pivot machine gun? Pivot machine gun is a series of bars. It doesn't matter what time frame you're using it, but in the same time frame for all bars. Higher highs, higher lows consecutively, or lower highs, lower lows consecutively. And then once we breach the first low in an uptrend or the first high in a downtrend, that's where we begin that pivot machine gun trading. The goal of this is to, of course, reach the maximum, right? The maximum is to reach here or to reach here. That would be the goal. Is be able to push all the way here from the top all the way to the bottom where that series started, or from the bottom all the way to the top, right? So depending on where you're heading. So if you're going, if price was going down, then we're targeting where that downtrend started all the way up. If we're heading up in a bullish structure and we're having a pullback and that bullish momentum is temporarily broken to the downside, and that's where we'll be targeting the start of that series of higher highs. So that's the idea of pivot machine gun. Now I'll tell you one thing to be very, very clear. Just because you see this setup and the first trigger, doesn't matter which direction, just because you see a setup and a trigger, it doesn't mean we're gonna hit all the targets. It doesn't even guarantee we're going to hit a target, but this is what it means. And I'm going to show you how in the last few days we have missed hitting those targets. That's why you don't blindly enter them, right? You enter them at a very significant area of value where maybe in the time frame continuity, the lower time frame is moving in the opposite direction. If the opposite direction happened to be bullish, then you want to resume the full time frame continuity bearish momentum, then you can easily take this trade because that's what the setup is. It's same way on a downtrend, when the full time frame continuity, all your higher time frames, monthly, weekly, daily, are up, but you have an hourly trend down, that is just an opportunity of a short-term pullback to resume the direction of that full time frame continuity. We resume that bullish momentum, then we can feel comfortable to take this trade. Otherwise, I highly recommend to stay away from these trades, but because it's a known actionable setup, I wanted to discuss about it today. So as we look at that, let's look at different times, looking at the hourly chart, right? So if you look at the hourly chart, at the end of January, we had a series of higher highs, higher lows. Maybe there's a one, I would ignore this one, but higher highs, higher lows. And then immediately on the 31st of January at 11:30 a.m. Pacific time, we broke the low of the previous bar. Does this mean we should take it to the downside? Well, we have to look at the full time frame continuity. At that moment, the weekly was up, the daily was up, the monthly is down. So all the three are not lining up. When they are not all lining up, then I am not going to take a position on either side, right? There's some confusion which way the market is going to go, so we don't take that trade. Now, same thing here. On the way down, you see a series of two down, two down, two down, two down, two down, finally a two up. Do we take it? Potentially, but again, during that time we had a green weekly but red daily and monthly, so not very comfortable to take it. You could, but as you can see from here, we hit a few levels, right? We went almost all the way to the top of that bar. So this one you could consider a completed pivot machine gun. Did you take the trade or not? That's where I'm saying there's some divergence here. There's not agreement here. When there's no agreement, I don't like to take those trades. When we come to February 10th, that's where we started down, 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 two down, two down, two down, two down, and then we have a two up that only hit the partial target, right? I mean, I don't even consider it fully hit because it failed to close it completely. So we did not go to the height of the last bar that started this downtrend. Why? Because monthly is down, even though weekly is up and daily was up for that day, but then it's down for the next day. So again, not a very convincing full time frame continuity to enter this trade. And then once you have that two up, then same thing repeats, two down, two down, two down, two down, two down, all the way down. And then we have a two up followed by another two up that only went as high as target one. Remember, I said target one would be the entry bar minus the previous bar, right? That's the previous bar's high. That's our target one. So in this instance, this bar went to that target bar because here was what triggered us, and then we went as high as there. So not completed. Why? Because again, our monthly is saying it's bearish, and I don't feel comfortable entering a bullish entry when everything else is saying bearish, right? Monthly is bearish, weekly is bearish, daily is bearish, then no full time frame continuity. That whole thing repeats here last week, right? Two down, two down, two down, two down, two down, and then we have a two up, and then the following bar hit target two, and then it stopped. And then again, two down, two down, two down, two down. Today, we have a two up that hit target one and two, and then we have yet to see what this is going to do. Again, for me, this is no entry. When I say no entry, I mean there is no pivot machine gun entry, because that's what we're talking about. There is no pivot machine gun entry because everything is lined up to the downside. So we're not entering a bullish momentum trade for the downside. If we were to get a pivot machine gun to the upside when everything is red, then we can enter a bearish momentum because it's lining up with the rest of the full time frame continuity time frames, right? So this is really what it's about. So just because you see the setup, right, not every setup is actionable. It is set up, yes, you can take action on it, that's what it means, but you have to look at the bigger picture. This is why there's this discussion of full time frame continuity, looking at the bigger picture in all your time frames. 5 times your current time frame if you're doing 1 hour, so that's 5 hours. For me, that's close enough to the daily. 5 times the daily is weekly, and 5 times the weekly roughly is the monthly, right? Not quite 5 times, but you get the gist of it. So just because the setup is there, it doesn't mean you should take it. You have to look at the bigger picture. Where are we coming down to, and then take a position accordingly. I'm still slightly bearish in this move. Geopolitically, nothing has really settled down yet, and there's nothing that said we're bullish, right? Everything is pointing down. Even our hourly chart is lower highs, lower lows, lower lows. Until this structure is broken, right? Until we start to see this happening, meaning we start to see higher highs, higher lows. Until we see that kind of structure, then it's still a downtrend. So still biased to the downside for this position. So just wanted to be clear, just because you see a trigger, it doesn't mean you should take it. As you have seen in the last few days, the last 2-3 weeks, we get the triggers, but there's no follow through because we're not having a full time frame continuity. Yes, you can talk about this area as a follow through. Nothing is 100% perfect, right? But for me, this is not a trade. So I'm not going to sit here and tell you, oh, I took this trade. No, there's no trade because it does not align with the rest of my narrative, right? I have the monthly that's telling me I'm a down bar. I could expect a reversal, but again, when you're looking at lower highs, I'm more biased to the lower highs. Here, that was broken, yes, true, but then this stopped right at 70% retracement when I drew it on the daily. In my past videos, I talked about this. So as soon as we stop there and we get a reversal, a pullback, I'm not yet confident until we clear this area. And as I mentioned in my few videos, we haven't cleared this area. I'm not bullish yet, and we actually continue to be bearish. So I just wanted to do this short video to discuss pivot machine gun and how you can use it, how you can make it actionable based on the rest of the picture, the big picture, the full time frame continuity, where everything else is lined up. Because we don't want to fight the trend, we want to follow the trend. All right, everyone, take care, and I'll see you in the next video.